This is a story about one of the largest margin calls on WallStreetBets, a story about a trader whose strategy turned sour and against all odds he somehow came out with a gain. While browsing through the WallStreetBets subreddit, I came across a very interesting post by Heartbleed Hack. In short, he made around $700,000 worth of gains while also receiving a $17 million margin call while doing a SPY Iron Condor with 9,000 contracts. So he's been on a bit of a downward spiral as he was still playing with gains for past month. When he was sitting on a 4x to 5x of 7,800 SPY puts, it changed too fast, but gains were about 600k when he tried to close. He had been burnt on CPI before when he lost $210,000 in just a minute and ended up being down 136k on the day. So he bought some puts as a hedge on other positions and dollar cost averaged a bit too aggressively and ended up with 7,800 contracts at a price of around 17 cents. Lots were tens of thousands on bid-ask, but when he tried to close, it shrank to 1 to 50 and the candle would jump on each limit order. So he had to market sell as this is approximately $300 million in notional value. So instead of more than 600k in gains, he ended up closing for 15k in gains with a hurt mojo at the money he could have had and had fun losing later. Last week he wanted to enter an Iron Condor, but by the time his money swept from his futures account, it was too late. On Monday, April 24th at around open, he entered into a slightly bullish Iron Condor of 9,000 contracts with expiry on May 1st and then jumped on a 4-hour plane trip which was delayed 2 hours without Wi-Fi. For those of you who don't know, Iron Condor is an option strategy of 2 puts, 1 long and 1 short, and 2 calls, 1 long and 1 short. In this strategy you basically go long, or in other words buy one further out of the money put with a strike price below the current price of the underlying asset. At the same time you short, or in other words sell one slightly out of the money or at the money put. You also short one slightly out of the money call and buy one further out of the money call. That way you limit your loss while you make maximum profit when the asset closes between the middle strike prices at expiration. And in his example he bought 2,250 SPY puts with a striking price at $409, he sold 2,250 SPY puts with a striking price at $413, sold 2,250 SPY calls with a striking price at $414 and bought 2,250 SPY calls with a striking price at $418. His break-even was at around $410 on the low end and $416 on the upper end. His max gain was around $700,000 if SPY closed between $413 and $414 on May 1st. Meanwhile, his max loss was around $300,000. Monday went okay, but Tuesday and Wednesday killed him. Maximum loss. He decided to lang out of the calls, leaving around 60k on the table on the gain side in case it bounced back. He was now down over 300k, and Schwab flashed a total loss of 750k on screen. He assumed this is normal as their percentage stuff is shit and nearly always wrong, and he usually just watches account balance. However, in the middle of the night it showed account balance going from 1.1 million to 400k. So he got a tad worried as he received no calls, no emails and no notifications. He found out at 5 AM that 884 of his puts with a striking price at $413 he shorted were assigned early, and he was now long 88,400 shares of SPY, which he sold at $413 overnight as there was no time value left on the puts. So the extra loss was due to a reporting error in their shit user interface. And here things get interesting. He proceeded to call Schwab and was alerted that he was now holding around $36 million of SPY in an account with just around $1 million and had a $17,101,387 margin call. He was a bit worried they would sell the shares in the pre-market or after open all at once on a market order, leaving him lopsided with his puts with a striking price at $409 in a rising market. For context, this was worth around $1.2 million around close on Wednesday, April 26. Schwab encouraged him to exercise the puts, but he said he would watch GDP first as there may be time value left with the market rising. Luckily the market kept going up. At open he had to have a broker on the phone for 90 minutes while he slow walked sell orders of shares and puts to not be lopsided in the trade and try to get benefit of the rising market. He obviously wanted to keep them as long as possible as his max downside was already hit and he could only go up assuming they didn't market sell the shares and leave his long puts are exercised for him, killing about 250k 1k in time value. He hand typed sell orders in lots of 1000 to 4000 shares and puts for 90 minutes with a broker on the phone who was also talking to risk management. The exercise cost him about 300 to 600k in additional gains on top of the 900k since he could not hold them due to not having $17 million under his mattress that he could send on a moment notice. And the remaining of gains on that day was some revenge trading of about 8000 SPY call options at a couple strikes, which he bought on Wednesday night. So to sum it all up, he made about $700,000, and somebody asked him why doesn't he do this every day on a smaller scale, and he gave the most wholesome answer I have ever seen on WallStreetBets. Time. It's the most valuable thing we never get more of. I already work too much and would prefer playing with my kids. If you like this video, you should definitely check out the video that just popped up, and if you would like to support my channel, make sure to subscribe as you'll help me out a lot in reaching my goal of 600 subscribers, and thanks for watching.